Hey guys, it's Ms. Morgan and we're going to talk about prepaid expenses, the first category of adjusting entries. I'm going to show you two examples. I'm going to move through them very quickly. The first example is supplies. When I talk about supplies, I normally draw a door on the board. That's because when you think of supplies, I want you to think about a supply closet. You see here, July 1st, we paid cash for supplies of $2,000. Well, you debit supplies, the asset account, and you put them in the closet. As long as those supplies stay in the closet, they are assets. You would credit cash for $2,000 because you have paid out cash. And whenever you pay out an asset or use up an asset, it goes on the credit side. So that's our first entry. At the end of the year, we took an inventory of that supply closet and we noticed that the supplies on hand are $1,200. Well, when you total out a T account, you always draw a line at the bottom and then you balance it out. And here it tells us there are supplies on hand of $1,200. So now let's evaluate this T account. Well, did it go up or down? It went down. It actually went down by $800. So an adjustment is needed to adjust the supply account for the supplies used up. And guess what? When we use them up, we get to call it supplies expense. So the journal entry to adjust supplies are debit supplies expense. And here the amount is $800. And then we're going to credit the supplies account for $800 because our supplies went down. And this amount gets to go on the income statement as an expense for the year. Insurance is next. July 1st, we purchased a $6,000 one-year insurance policy. We would debit prepaid insurance here because we paid it up front, and we would credit cash for $6,000 because we paid cash for that. An insurance policy is an asset to us because we are now insured. We are holding a piece of paper that says we are insured, and that is a necessity of doing business. That is an asset. It is a resource that we need in our business, okay? An adjusting entry at the end of the year, we've got to decide. Well, yes, July 1st is when we purchased this insurance policy. Has any of this policy expired or been used up? Yes, 6 months worth of this insurance policy has now been used up, and we can put that amount on our income statement as insurance expense. So our adjusting entry for insurance would be to debit insurance expense for $3,000. Where did I get $3,000? Well, and I would credit prepaid insurance for $3,000. That's because 6 months has expired. So what happens there is I debit insurance expense for $3,000. I credit prepaid expense for $3,000. The balance at the end of the year of prepaid insurance is $3,000. That means at the end of the year, my policy is still worth $3,000 because I have 6 months more of insurance. This will show up on the balance sheet. This will show up on the income statement.